So the new year has started for us all as our investments and, well, take a look. The triple stack shows we were off just a tad or two, although we had been up earlier in the session. They've been on a huge 2-year run. The S&P posted back-to-back gains of more than 20%. The Nasdaq up nearly 80% since last year, since 2 years ago began. And now Donald Trump's policies and whether they will sustain this and promote it further. After all, promising deregulation and income tax cuts, along with steep tariffs. Paul LaMonica is with me. Guru LaMonica, first of all, sir, very, very good new year to you. I'm sure somewhere in the folklore of Wall Street, there is a little ditty that says, if market's down on Jan 1, then year will be like no one knows, or something like that. But what does it mean for us, do you think?
Yeah, Happy New Year to you as well, Richard. And I think that clearly there is disappointment about the fact that the market slid, kind of limped its way towards the end of 2024 and is now off to a sluggish start of this year. But let's keep in mind the so-called January effect, looking at this just narrow window of the last couple of trading days of 1 year and the first 2 trading days of the next. Yes, there's a lot of folklore about what it might mean for the rest of the year, but if you look back at what happened in the market at the end of December 2023 and the first 2 trading days of last year, stocks were down a tiny bit, and 2024 wound up being a very great year for the market. So I wouldn't get too caught up in this market sell-off, especially since November was so great after the election.
So Donald Trump has vested interest in a booming stock market. Let's ignore for 1 second about what ignore the Fed and how it might put the brakes on if it feels inflation. But how does he achieve that goal? If his barometer of success is a booming market, what does he have to do?
Yeah, that's a great question. So I will ignore the Fed per your request. I think that probably Trump and the Republican Congress realize that they're going to have to look very closely at what the negatives of potential economic policies from a fiscal standpoint might be, namely any tariffs and immigration controls, because those could both be inflationary. They could hurt the job market. We all know that the promise of deregulation and lower corporate taxes, Wall Street loves that. Corporate America loves that. But will inflation remain stubbornly, if not as high as it was 2 years ago, higher than it and, sorry, I'm going to ignore you now, the Federal Reserve would like, then that could be potentially a problem. We can't just cut off the Fed.
I know, I could see you inching your way and finally, let the flood rivers go. But here's a good one for you. Look, is there a feeling that the bull run is tired? I mean, we've had a few good years post-pandemic. Now, the last bull market ran for more than a decade, so by definition, it can go a lot longer. But what's the gut feeling on just the sheer natural impetus of this market, bearing in mind AI and all the other things that will be promoting it?
Yeah. No, definitely. I think that there is a strong case to be made that we are still in the early stages. As you point out, I mean, 2022 was not a good year for the market. So if you look at the past 2 years being as strong as they were, bull cycles can go on for a fair amount of time. This is only year 3. And I think what investors are hoping for is that the broadening of the rally that we started to see a little bit before the election last year, maybe that picks up again. So you start to look at small caps, benefiting from fiscal stimulus, and also, beaten down sectors. I have a piece on Barron's about how you could see consumer staple stocks and even healthcare, despite the threat of RFK Jr., the valuations are reasonable. They pay decent dividends. The earnings growth is steady. So we might see this broadening out of the rally. It's not just the Magnificent Seven or Grade 8, if you want to throw Broadcom in there now, too.
Now I've got to move on, but I know Pamela's listening, my producer. Before too long, you and I need to talk about growth versus value, because I'm seeing a lot of your article is one of them, but a lot of chatter now that maybe the sensible balancing of a portfolio is towards growth, it's value rather than growth. We'll talk about that. Thank you, sir. I'm grateful. Have a good one.
Thank you.
Thank you.